It's time for Fomo. So we are talking, of course, all things Tesla. This is a frequent flyer on this show, but now pacing for its 12th straight gaining session, which would be its best winning streak on record since the company went public 13 years ago, tying that record back on Friday when it closed up for 11 straight sessions, like you said. But I think this is pretty significant. I mean, just considering the fact that this stock has never seen this degree of a run, it's up 35% just over the last week.
Meanwhile, Tesla looking to extend its record rally to a 13th session, coming off another analyst record upgrade, this time from KGI Securities, boosting shares to outperform and writing Tesla's automotive investments in the US are paying off. Its AI prowess is underrated.
13 straight days of gains. Tesla is on an epic rally. The entire year has been very storybook. Will Tesla have a pullback sometime in the middle of the year? Or will it be smooth sailings back into the $1 trillion market cap? Only time will tell, but I'm gonna tell you right now, your boy just put in a call. I'm gonna put the coins in the stock casino and let the reels ride. If we rise, we rise. If we fall, we fall. So be it. We're gonna ride this wave until they give me reason not to. I missed out on an opportunity when the stock was at 215. Everything in my brain told me there's going to be a pullback. There's going to be a regression in the stock market as a whole. I drank that Kool-Aid and I missed out on a golden opportunity, but that's neither here nor there. We can't change the past. What we can do is we can dictate the future. And I choose to believe that the stock has legs. It has room to run. Very well could ride all the way up into the Q2 earnings, where Tesla's success, in my opinion, will hinge on its automotive margins. In the grand scheme of things, will Q2 automotive margin dictate whether or not Tesla is the transformative company we all know it will be in the future? No. But it will give some insights on where people plan to put their money in the interim. Long term, there's no doubts in my mind, Tesla, multi-trillion-dollar company, easily. We're sitting below 1 trillion as I record this video. Granted, I don't believe Tesla will be under $1 trillion for very long, but I don't have a crystal ball. The stock could easily fall just as quickly as it rose. For those that were invested in 2022, you know what I mean. But right now, Tesla is riding high. As you can see, Tesla is up a little over 3.5% on the day. For the week, Tesla is up almost 14%. How's the 1 month look? Oh my goodness, up 56% over the past month. If you go back the past 3 months, up 55%. And for the first time in a long time, if you go back a whole year, Tesla is up just over 15%. Things are looking fabulous for Tesla in the year of 2022, and I don't see any reason for it to stop. I believe Q2 will offer records on many fronts, and the margin number will be within reason. But they're going to set records in production, deliveries, the energy department. I feel that this is going to be a huge quarter for Tesla. And the stock market may not realize it, but guess what? What the stock market fails to realize today represents opportunities for traders and investors alike. And just a little insight on the call option I opened yesterday. Expiration date June 23rd, costing me about $975. Break-even price is $257.25. Current price is $259.16. Given Tesla's volatility, this could easily be wiped away tomorrow. But with an expiration date set for 10 days from now, we soar to levels of 275 or higher within that time frame. I have to be patient. The closer I get to my expiration date is the closer I'll decide whether or not I'd like to close out a position and take gains. Sometimes theta will erode a position faster than the stock price movement, so you have to be very cognizant of that. But right now, I've got 10 days. Theta's not as big a monster as I'd like to think it is right now, but next week, if we're still hovering around this position, I may consider cutting my losses and taking a majority of these profits. But right now, we still got legs and we got room to move.
It's time for Fomo. So we are talking, of course, all things Tesla. This is a frequent flyer on this show, but now pacing for its 12th straight gaining session, which would be its best winning streak on record since the company went public 13 years ago, tying that record back on Friday when it closed up for 11 straight sessions, like you said. But I think this is pretty significant. I mean, just considering the fact that this stock has never seen this degree of a run, it's up 35% just over the last week.
This is one of those things in terms of magnitude or quantity of days. You're right. Obviously, there was that time where it was like the stock was going crazy and it was going up like 10-15% every day. It seemed like for 2 or 3 days in a row. That was a little bit different. Obviously, it didn't seem sustainable, but this has just been like steady 3, 4, 5% days one after another. It does seem to be starting to lose some of that steam now. It's only about 1%, with the market itself up about 1%, Jenny. But this is a name that just, no matter what the news story is, seems to kind of take it in stride. Obviously, struggled last year. Wasn't alone in that. Basically, all of tech struggled. Basically, all of the market struggled. And particularly electric vehicle companies, even legacy autos like Ford, after touching like 25, were back towards the lower teens in that range. So when you look at a name like Tesla, you blink and you miss it. And so, someone could be forgiven if you just kind of like covered up what name you're looking at and just showed the shape of the chart over the last few weeks. This looks like Palantir. I mean, it doesn't look that different. It's been straight up, as you said. Now, if they were able to close above that unchanged line today, 12 straight days. That's over 2 or almost 2.5 full weeks of just up move after up move after up move. It's incredible.
And as you can see there from the 15-day chart, it's up like roughly 35% over the last 12 sessions. So you can see that really speaks to the fact that we have just been pretty much straight up in Tesla over the last 2 weeks. But interesting enough, when you zoom out, which I always think is important, it's up only about 6% over the last 12 months. So even in spite of this 100% year-to-date rally, I think that goes to show where the stock was and how beaten down it had been. So we are seeing analysts today favor this name, KGI Securities, upgrading Tesla shares to outperform from neutral with a $335 price target, which is, I believe, now a new street high, because we did hear from Dan Ives, of course, at Wedbush, $300 on Friday. So this then puts that mark slightly above that $300 target. They said that Tesla is seeing its vast U.S. investments in EV assembly and battery bear fruit in this year. The firm does view the company as the biggest beneficiary of the Inflation Reduction Act and federal funding for EV charging infrastructure. They said that every Model 3 and Y sold now qualifies for as much as the $7,500 in tax credits, and Tesla stands to receive billions in dollars in this production tax credit for its battery operations. In addition, the firm does believe the company's, and really with its artificial intelligence, is underrated at this point, which I completely agree with. And actually, because I did tune into their analyst day back, I believe it was early March, they highlighted the fact that they were expecting to receive this massive income from the fact that they would be big beneficiaries from the Inflation Reduction Act. So this is something that the company has highlighted. It was not the most interesting or flashy news of the event, but I think that's why it's always so important to listen to these events from Tesla. They give so much information regarding some of these tax details and the ways that their company will benefit. I always find that fascinating. But this name has been on an absolute run, announcing partnerships last week with like GM, week before Ford, to provide their charging infrastructure, which is being seen as evening out the playing field per Elon Musk. I also think the street really likes the fact that he has distanced himself, at least as the head of Twitter. We finally see this attention now paid to Tesla.
Yeah, it's certainly possible. How I would kind of sum this up, though, and this kind of ties into the general market conversation that we talked at the top of the show, this new bull market narrative. It really just depends on where you want to start, because you could make an argument that if you had, in the case of Tesla, I'll kind of oversimplify it, it's as if you started with 8 coins, you watched that go down to 2 coins, and now you have like 5 coins, and you're calling that a win. You still lost 3 coins along the way if you started near the top. And
he ain't never lying. If you put a lot of your money back in the middle of 2022, you still have a little ways to go. Things are looking better. Things are looking optimistic, but it could turn on a dime. Main thing is you need a long-term horizon when you're messing with Tesla stock. When you're playing in the options field, you kind of got to ride the momentum of where that big money is headed and where it's going. And you need to be cognizant of all the macroeconomics. But if you've bought Tesla stock, you only have a loss if you've decided to sell. That's the only way you lose. Should you continue to hold, which I highly recommend. Not financial advice, but just what I would do. Hold that stock as long as you possibly can, and you will reap the benefits. The rest of the world and the stock market will soon realize Tesla will not only revolutionize the way we move from place to place, but how we generate and share power as well. Tesla is in the process of turning at a minimum of 2 industries on its head.
Depending on where an investor began their journey with a name like Tesla, the story is very different. The same goes for the overall market. I don't get too caught up in narratives of new bull market, new bear market. It's just math. It's just one point to another. It's been an impressive comeback. The stories are never ending at the name like Tesla. The bears and the bulls are at a never-ending fight. This is the endless war when it comes to the market, the disagreement around this particular name. But what does that always add up to? It adds up to a ton of implied volatility, a ton of volume, a super liquid stock, and a lot of interesting news to talk about. So Tesla, I mean, just to sum it up here real quick, Jenny, it's crazy that it's been 12 days in one direction because no one ever agrees about this name.
That is such a good point, because I do feel like we oftentimes say this is one of the most polarizing names out there, although still has the highest of all the S&P 500 stocks buy rating ratio among the analysts that cover this name. So at least the analysts are in agreement, but I think that you take to social media and read some more traders and investors' thoughts, that's where you see really the true divide. But I recall when they released their quarterly results just a few months back that everyone was so concerned about their margins story, and that the fact that they have had to decrease some of their prices for various models. What do the margins look like into the back half of this year? It's like the market is so quick to forget that there was grounds for a pretty negative narrative around what their next upcoming quarter looks like. But we've completely forgotten that. It feels like over the last month, I mean, shares have been on a tear. Like you said, Alex, so I definitely think this FOMO feeling today is totally to the upside.
As it usually is, right? Tesla just seems to bring out the optimist in many, but it's fair share of bears, and I don't mean to upset them. But at least today, we'll look at it from an optimistic standpoint.
Both of those analysts spoke quite elegantly toward Tesla. The stock is a darling of optimism, despite having a cave of bears. You already know which side of the fence I lean on. I don't mind poking the bear a little bit. Tesla stock due to be a multi-trillion-dollar company in short order. And I'm just trying to get my ticket on the stock so I can take a ride to the moon.
Meanwhile, Tesla looking to extend its record rally to a 13th session, coming off another analyst record upgrade, this time from KGI Securities, boosting shares to outperform and writing Tesla's automotive investments in the US are paying off. Its AI prowess is underrated. Ed Ludlow has more. Hey, Ed.
Yeah, good morning, John. We have extended Tesla's streak to a 13th straight session, extending the record run of gains that the stock has seen. KGI's upgrade is one catalyst. There was also a note from Morgan Stanley late on Monday saying that it's time for Tesla to start thinking about a financial services arm so that in the next 9 to 10 million customers that they try to acquire, quote, they can give more optionality around monthly lease payments as opposed to outright cash purchases. You also will have seen the news on Monday that a number of charging companies in quick succession put statements out saying that they would adopt Tesla's North American charging standard as an option for their customers at their charging stations. That continuing to be a point of focus for Tesla, really, and what kind of a business they can evolve for themselves in opening up their network of chargers, fast chargers or superchargers to peers and rivals, and seeing the pressure that some of the charging infrastructure rivals are under. We're up more than 107% year to date. Tesla, a stock up 107% year to date, and extending that to a 13th straight session, which is a record, John.
Ding, 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 folks. We have the other charging networks committing to the next connector. There's no doubts that they would have to do this with GM and Ford following suit, building their vehicles with the next connector. But let's not forget, they make so until they're able to fix that stigma, people will often go out of their way just to find a Tesla supercharger, which shouldn't have to be the case, but you know, it is what it is. Tesla stock continuing to ride the wave of good news, both in the Fed and in the EV space. Tesla's fundamentals as a company are impeccable, and it will be on stage in the later half of July. Tesla stock's latest risk, EV overcapacity. Let's take a look and see what this is about. Electric vehicles are poised to become the dominant mode of personal transportation. Fact. That should be great news for Tesla, but there's more to making money than just growing demand. There's also supply. Some investors, car buyers, and car makers are at different stages of grief regarding the rise of EVs. There is denial. The technology won't work. Anger. Regulators did it to us. Bargaining. It's a niche technology. Depression. I won't give up my sports car. And acceptance. All traditional automakers are pouring billions into EVs, and spending plans are accelerating. No matter where any constituent finds itself, EVs are building a critical mass, and there are only going to be more on the roads every year. The renewable energy research arm Bloomberg, called Bloomberg NEF, updated its EV outlook for 2023 this past week. It sees 730 million EVs on the road globally by 2040. there are roughly 2 billion passenger vehicles on roads today. Only about 1%, or 20 million, are all electric. After including EVs discarded by their owners due to age, the average car, EV, has a useful life of a little longer than 15 years. About 800 million to 900 million EVs will be sold over the next 17 years, according to Bloomberg's forecast. About 7.5 million all-electric cars were sold worldwide in 2022. More immediately, Bloomberg sees 27 million battery EVs sold in 2026, which works out to an average annual growth of almost 40% from 2022's EV base. The main factor for the outlook is cost. Bloomberg says that at the end of the decade, EVs will be cheaper than gas-powered cars without subsidies in most segments. EVs are also cheaper to maintain and refuel. Electricity generally costs far less than gasoline on an apples-to-apples basis. To be sure, gas-powered cars are not dead. There will probably be applications where an engine tops batteries, but Bloomberg sees EV sales accounting for 28% of new car sales in America by 2026. And it's probably closer than the rest of the industry has modeled out. But I have a feeling it's going to miss the mark on the downside still. 28% of new car sales in America by 2026 sounds good, but it will fall short of the mark. That's all great news for Tesla, but there is a risk. Everyone is building EV capacity, and there may be too much supply by the middle of the decade despite lofty demand estimates. Benchmark analyst Mike Ward, who tracks the North American EV capacity, sees North American EV makers having the ability to make 2.6 million EVs by 2025 and 4.5 million by 2030, excluding Tesla. Including Tesla, based on the existing plants and announced Mexican facility, that could be as high as 4.6 million EVs by 2025 and 7 million EVs by 2030. Now, obviously, they're expecting Tesla to just sit on their hands and not do anything after the factory in Nuevo Leon is built. Terrible deductive reasoning, but we'll let it slide. Even if Tesla doesn't hit its stated goal of 20 million EVs by 2030, you gotta figure that they're gonna fall somewhere close. They have been laying the tracks for this inevitability. We need this many batteries. We need this many facilities. You don't think they have this stuff planned out to a T? By 2030, there will be 3 more factories in addition to Nuevo Leon. As you may or may not know, Tesla has increased its expected capex over the next few years as they become a magnet for revenue, as the only legit option for electric vehicles and an entire ecosystem that gives you peace of mind. When Dan Ives says Tesla is playing chess while everybody else is playing checkers, he must have been talking about that chess from Star Trek, because I don't know what Tesla has planned next, but I know there's nobody close. There's nobody with the foresight that Tesla has. The basis of this article is saying that there are too many EVs that are going to be on the roads as we get closer to 2030. They're expecting the adoption rate to go at a linear pace. They're not expecting that if these things are affordable, they are cheaper to own than an internal combustion engine. They are easier to operate. They are more fun to operate. You've got to be kidding me if you don't think everybody would want one of these if they can afford them. And I did like that analogy about the stages of grief that everybody's in. I'm definitely going to utilize that one. It does capture the entire scope of where people are at when they're trying to buy EVs. Around that time, right before 2030, nobody's going to want an internal combustion engine because there's going to be a stunning comparable version in a battery electric vehicle space, whether it's made by Tesla or some other auto manufacturer. Nobody's going to want that depreciating asset in an internal combustion engine. In short, ride the Tesla stock wave as far as you can. If you've been reaping the rewards of the 13-day gains, let me know in the comments below. I can't wait to hear about it. Until next time, be easy. Peace.